Welcome back to Guide to the Global Economy. I'm Josh Lipsky, Senior Director of the Atlantic Council's Geoeconomic Center. It's been a few weeks since we've gotten together. Our team's been traveling, but we have some new data to share with everyone. We're going to dive into Eurozone inflation. We're also going to look at the BRICS and the New Development Bank and their effort to bring on new members, including potentially Argentina. Is this a move towards de-dollarization? We're skeptical, but we'll look at the data together and explore it. But first, I want to bring in Niels Graham, Associate Director at the Geoeconomic Center. Niels, it's been over a year since Secretary Yellen came here to the Atlantic Council and gave what some people refer to as the friendshoring speech. And we wanted to take this opportunity to look at whether friendshoring was actually happening.
Exactly. So we want to dive into the data over kind of shifts in U.S. imports, particularly of manufactured goods, both electrical goods, so things like computers, smartphones, the components that make those up, so integrated circuits, as well as a lot of mechanical goods, so the things that go into a lot of things that we produce, whether it's cars, other vehicles of transportation, aircraft, and so forth. That's exactly what we've done over this past period.
So it's only been a year, and I have to say that I was a little skeptical that we would see any significant change, but let's look at the data.
Exactly. So really what we're looking at here are shifts in U.S. import market share of two goods categories. Firstly, electrical manufactured goods, and then secondarily, mechanical goods. What we're seeing here is a pretty stark drop. Again, over the course of just 1 year, Chinese market share has dropped by a little over 2%, around 2.5%, and has been instead replaced by these 5 countries, namely India, Thailand, Taiwan, Mexico, and Vietnam.
It's almost a direct replacement, 2.5 to 2.5, almost directly. I was surprised when we first came up with this data. I didn't think it would look so clear as it has, just in a year's time.
Exactly, and really what we're looking at are hundreds of billions of dollars worth of goods being traded and shifts in that sort of market share. So these are large supply chains that we're talking about. These things don't move very quickly, so that's why, again, we're somewhat surprised by how quickly these shifts have sort of happened.
And this was always the narrative around the friendshoring speech when Secretary Yellen gave it, and others in the administration have talked about it. But these supply chains have been built up over decades. There's no way they could transition that quickly. And that's true, but there is something going on.
Exactly. So we're seeing a few different things going on here. I think first and foremost is really not to undersell the impact of the continuation of the Trump trade war.
Yeah.
You know, these tariffs are still in place, particularly around electronic goods.
Yeah.
What this has done is made Chinese exports a lot less competitive and allowed the rise of sort of new import markets, namely places like, for example, Vietnam, Thailand, Taiwan, all of which the U.S. is now increasingly importing manufactured electrical goods.
And in fact, I think we looked further back at the data, not just in the past year, and this is a trend, to your point, that has gone on since 2017, 2018.
Exactly. But in addition to the trade war and the high tariffs that came with that, you know, the Biden administration has been pursuing a range of new sort of supply chain deals, whether it's linking directly with other countries or through these all larger multilateral frameworks, things like IPEF, things like the TTC, where the U.S. is, again, trying to align its technical standards, its import shares from all these, a range of friendly countries.
And when we look at this data, just to be clear, we're thinking of cell phones, computers, things that go into making of those, as well as mechanical.
Exactly. You know, so we're looking both at the end products themselves, as well as the subcomponents that sometimes U.S. manufacturers themselves use. So things like integrated circuits, which have been getting a lot of attention in recent weeks.
So one way to look at this chart is basically to say, oh, friendshoring is working, but it's a little more complicated than that.
Exactly. You know, so we're doing a pure look at the data. However, there are some questions overall with the data. So firstly, with the trade war, you know, Chinese companies may be reporting less of the sort of exports that they're ultimately sending to the U.S. to avoid high tariff bills. So that might be China sort of suppressing its own information, making it seem like their market share is a little bit lower than it actually is, just to, again, avoid those higher costs overall.
I think that's just such an important point to pause on, that there's the data, and then you have to understand the reporting of the data, the quality of it, something we're increasingly thinking about with China, especially in the past year. Is what's being reported out of China accurate? Is there avoidance of tariffs going on here? Open question.
Exactly. And the sort of second dynamic is what we're looking at here is just where the origin country is, not really what company made it, not really who owns that company overall. So we're seeing as well Chinese companies moving out of China to a lot of these other places that we're seeing here to set up new production facilities there to take advantage of lower labor costs in some cases, but also, again, this tariff differential. And then for places like Mexico, for example, just the proximity to the United States, that was sort of learned over the sort of cargo ship shortages that happened during COVID.
So, you know, to put that in the context, if China sets up a company in Vietnam, which they've done, or in Mexico, which they've done in terms of sharing of companies, and then ship something out, it's categorized here as from Vietnam or from Mexico, but that might not necessarily be the friendshoring that the US was thinking about.
Exactly. I think friendshoring has two overarching goals. First of which is to distribute geographically the destinations of U.S. supply chains, so that things like pandemics, for example, in the future, don't totally shut down all U.S. imports of certain electronic goods. So, for example, Chinese companies then setting up in Mexico, that's helpful, right?
Yeah.
That way,
Closer to home,
if
diversified supply chains.
exactly. But if your end goal is to sort of reduce the risk that China has of your critical supply chains, then it matters a lot less whether or not those goods are coming from China or Vietnam, if the ultimate end sort of producer is still a Chinese company that's still responsive to Chinese policy movements.
Yeah, this is why we always say, look at the data, but then dig one level beneath the data. Doesn't mean friendshoring isn't happening. It just means it's a far more complex picture and not straightforward. So what should we expect next?
Going forward, again, what we're seeing right now is still are the residuals of the trade war. A lot of the sort of policies the Biden administration are pursuing are not things that will shift supply chains overnight. There are things that will take 5, 10, even 15 years to really come to fruition. So things like IPEF, the supply chain initiatives that are happening there, the things like the TTC, things like these new critical minerals deals that the US is striking with places like Japan and the EU. These are things that will take 5 or 10 years for supply chains to sort of be reworked. So we're only seeing kind of the first start of friendshoring right now. As these policies come into play, we should probably see this market share drop further for China, and then other countries, places like, for example, India, Vietnam, only increasing.
I think that's such an important point. This is just the early returns. We would expect a more significant shift in the years ahead.
Exactly. So it's just something to watch going forward.
Thanks, Niels.
Thank you.
For our Under the Radar segment today, we wanted to look at the BRICS countries, their bank, the New Development Bank, and their potential for new members, which has just been developing over the last few weeks. I want to bring in Alisha Changani, Program Assistant at the Geoeconomic Center. Alisha, welcome. So what did we find?
Yeah, Josh. So before we get started, let's do a little bit of context. So the BRICS. BRICS are 5 nations. That's Brazil, Russia, India, China, and South Africa. And they have their own initiatives, including their own bank, which was established around 2014, and that's the New Development Bank. Something that I looked into is Argentina and its potential to be a new member in this bank.
So it's interesting, the BRICS, one, they exist, they have their own bank. Now they're thinking about new members. Why would Argentina become a member? What's behind that?
Yeah, so Argentina has been dealing with historical levels of droughts. Its exports have been significantly hurt. And in all of that, its dollar reserves have been depleting. So that's kind of encouraged the Minister of Economy, Sergio Massa, to travel to China to kind of renegotiating existing deals, including doubling its currency swap line with China, but most notably meeting with the New Development Bank and potentially its membership in early August.
And Massa is an interesting figure. We hosted him here at the Atlantic Council not that long ago during the IMF meetings. He's running for president now, so there's a lot going on the political side, and is always with Argentina a lot on the economic side.
Yeah, but something that I wanted to ask you, Josh, is that we're seeing Argentina kind of turn to China for yuan. But a question that people have been asking is, why doesn't Argentina just turn to the US?
Well, they certainly have many, many times through the IMF. Argentina's history with the IMF is long and sordid, and there's been dozens now of programs, many which have failed to meet the requirements. They're actually in negotiations now about a new program. And my guess is while those negotiations go on, and to your point about low dollar reserves, they're looking for an alternative. And maybe this is where BRICS or the yuan directly bilaterally come in to help them.
So what you're talking about is like a move towards de-dollarization. And I know there's been a lot of conversation of the BRICS nations kind of coming together to create like a gold-backed common currency. But Josh, I'm kind of skeptical about that.
Yeah, I'm skeptical about all of this. First, if we think about why is Argentina turning to the BRICS and turning to China, it is not because of the attractiveness of the yuan or the attractiveness of the BRICS currency. It is because they are low on dollars and they don't have an alternative, and they can't deplete any more dollars out of their system. So that's not necessarily a great signal for the BRICS or the yuan. They still want dollars, they just can't get them, and maybe in the near future they'll get more if there's IMF renegotiation.
Yeah.
Then to your point about the gold back, the BRICS, these alternatives.
Yeah, and recent news about India kind of taking a step back towards this announcement of creating a common currency. I mean, there's too many technical requirements to think about, capital requirements. How do you get 5 nations to come and agree on one common currency?
I mean, the idea itself was always a bit far-fetched to me, but if India is not a part of it, I don't see any real way this can be successful. What is important, and I think something we look at a lot for our future money work that you're a part of, is that countries do want alternatives. So even though BRICS and a gold-backed BRICS currency may not work for all the reasons we outlined, countries are looking. And if they're looking, the US should pay attention to that.
Right.
And I think that's something we'll keep following here at the Atlantic Council. Thanks for joining Guide to the Global Economy. Make sure to like or subscribe. We hope you continue to follow all of our work here at the Atlantic Council Geoeconomics Center. We'll have another episode next week where we're going to focus on Turkey, the European Union, and everything that's happened at this week's NATO summit.